If you're familiar with my work, you've probably seen what I'm going to show you today in different ways, but I believe that the key to success is repetition. I'll make things real simple for you. I have nothing to sell you except some ideas. I'm talking to you today from Santa Cruz, California, about 70 miles south of San Francisco. Hopefully we won't get the coronavirus. Not too far north from here lived the great American Zen philosopher, Alan Watts. Brilliant guy, made some fabulous observations. One of the things he said about progress is that every progress, science and technology, has a way of undoing itself. So the discovery of antibiotics cured a lot of disease, but brought us super germs. Atomic energy brought us electricity, but great fear, nuclear holocaust. The discovery of the internet brought us great information, the ability to communicate quickly, but brought us a lot of fake news and a lot of crappy information. So the fact of the matter is this: it took me 15 years in my 42-year career to learn how to trade. I had no teachers. I had no one to show me what to do. I just had a bunch of stuff out there that most people can't learn from. It took me a long time to realize that truth was in numbers. I don't want you to believe or take at face value anything I tell you today. I want you to see it for yourself. Everybody wants to have a free webinar. Everyone wants free stuff. With free stuff, you're going to get exactly what you paid for. Maybe you'll get some ideas, but if you don't know how to use those ideas and how to put them into action, you're going to be toast and you'll get a lot worse than free stuff. So what I have to give you today is free, but the ideas are absolutely valid. They're provable. They're based on numbers. I'm the numbers guy. I will not do anything unless there's numbers. I'm going to start out with a very dramatic statement. The obituary. The obituary of technical analysis. Technical analysis, as we know it, is either dead or dying. By which I mean the days of chart reading, trend lines, Renko charts, box charts, candlesticks, Fibonacci, all the rest of that stuff that most people look at is worthless, non-algorithmic, it's not rule-based. And if you keep on doing that stuff, you're going to lose money. Why? Because that's not where it's at anymore. It's all about numbers. Most of the stuff that you see here, these things, the Fibonacci stuff, all that stuff, it's not based on rules. It's based on interpretation. It's based on some very loosely stated rules that you have to interpret for yourself. And if you need to do that, you're going to get into trouble. So I offer a very different approach. I don't mean to be dramatic about it, but the fact of the matter is, if you're reading charts, looking at trend lines, it's not going to work for you. So what are you going to do? Well, we're going to use a different approach. We now have computers. And by the way, some slides here I will skip and tell you to read on your own. No problem. I want you to get the essence of what I have to tell you, and I've got about 45 minutes to show you about 60 slides, so I'm going to go fast. But the good news is you can come back and re-listen to this thing and get the sense out of it that you need. So if you can test indicators on a computer or methods on a computer, you get the truth. And that removes all barriers, all interpretation. You'll know exactly where you're trading from and what you're doing. So profitable traders, trading is all about numbers. And in order to get the numbers right, you need to use artificial intelligence and machine learning. This webinar is not about either of those, but through the process of artificial intelligence and machine learning, I learned how to put valid methods together to give you the best results. No matter how good the results are, if you're a screw up, you're going to screw up no matter what I show you. So that's up to you. I can show you the gun, I can show you how to shoot, but you want to shoot yourself in the foot, that's your problem, not mine. So artificial intelligence finds patterns in data that are hidden, can't be seen with the ordinary eye. Because they're hidden, we need computer power to find them. And these hidden patterns are very, very easy to find with the right programs. So These methods are available to anyone today because they're not expensive anymore. But I'm going to tell you again, if you're part of the trading public, you're going to keep on using information that's out of date. And if you see those things, which you can find all over the internet for free, they're not going to work for you. You're going to shoot yourself in the foot, as I said. I get emails from people all the time saying, Jake, what am I going to do about my discipline? The reason I'm losing money is because I have no discipline. The fact of the matter is, you don't have discipline because you don't have confidence. If you don't have confidence, you won't have discipline. If you have confidence in what you're doing and you know it works and you have the numbers, you're going to believe what you're doing. That will give you the discipline you need. If you have the discipline, you'll make money. That will give you more confidence. If you have more confidence, you have more discipline. So many times people send me charts like this and I say, Jake, what do you think of this chart? Isn't it beautiful? I look at it and I say, what the hell is this? I don't understand any of this crap. It makes no sense to me. Why would I want to use all this stuff on a chart? It's way too complicated. Furthermore, most people don't even know how to use these indicators or where they come from. Most indicators come from price, and therefore they look like price. That's the problem. We need something that's independent. So don't do this. It's not going to help you. So what do you need to do? I'll show you. But first, let me tell you a little bit about myself, very little bit about myself. You can read this later. I've written about 44 books. I'm a real trader. I'm truly technical. I've taught thousands of traders all over the world. I publish 4 video newsletters each week. I'm a real trader. I really trade. I've spoken at over 800 seminars, webinars, and conferences all over the world. I've been on Wall Street Week. I've been on CNBC. I've been on FNN, CNN, you name it. Fortunately, I'm not a broker or a trading advisor. I'm just an educator. Everything I do is 100% objective, totally rule-based. Therefore, if I teach you something and I give you the rules and you see things differently than I do, there's a problem. Either I didn't teach you the rules correctly or you've got a learning disability. And since I'm a pretty good teacher, it's going to be your fault, not mine, because everything is crystal clear, no interpretation. So let's take a look at something else. You've seen the commercial? The guy sitting in front of a computer and there's somebody outside hollering, trying to come in. And the commercial says, don't get mad, get E-Trade. And the guy's sitting at a computer and he's trading and you're thinking, wow, this is really cool. I want to be like that guy. He's making money. The answer is he's probably losing money and he doesn't know what the hell he's doing. So the bottom line is this. You've got to have methodologies that are crystal clear. I'm going to show you some of those today. So, as I said before, I'm a numbers guy and you're going to find out exactly what I mean by that. I'm going to start out by something very refreshing. I have nothing to sell you. Nothing. You want to go to my website, you like what I do, there's a lot of stuff on there. Find something you find that's objective. If you want to buy it, that's fine. I don't care. Here's what I do care about. I want you to write me. Send me that nice email that says, Jake, with the concepts you presented today, you changed my life for the better. If you can do that, that will make me very happy. So let's go forward. Let's talk about this. If you're not making money in today's market, you have a big problem. This has been the easiest market in which to make money that I have ever seen. And I'm not just talking about day trading. I don't think day trading is viable for most people anymore. Even though I wrote the 4 best-selling books from McGraw-Hill on day trading, the bottom line is most people think about day trading. There's a lot of sex appeal in day trading. Ooh, I day traded the S&P today and made $1,500. I didn't even have to put up any margin on it because at the end of the day, in futures, the money's clear again and you can trade it immediately. The bottom line is this. Most people don't have the money, the patience, the intestinal fortitude, the methodology, the guts, the time or the attention to day trade successfully. All they have is the dream, and the dream is not going to get you very far. So you will not achieve success with subjective ideas. Today I'm going to share some ideas with you that are not subjective. Go to the internet and you ask the question on Google, teach me how to day trade. You're going to get, I kid you not, 80 million hits. 80 million hits. Everyone's got something to sell you. Everyone's got something to tell you, but most of all, they've got something to sell you. Today, I'm going to show you 3 specific ways to get the big moves. But first we have to ask the question, what the hell is a big move? What's a big move to me may be a small move to you, or vice versa. When I talk about big move, I'm talking about percentages. I'm talking about percentage gain, and that varies from trader to trader. But in any event, I'm going to show you some time frames here, and most of the big moves happen in the weekly or monthly time frame, not in the daily, although it can. I'm not talking about intraday, I'm talking daily charts. So a big move is a move that, for example, today, Tesla had a big move. Yesterday, Tesla had a big move, and so forth. So let's talk about it. Let me show you what I mean. So we always have the relationship between time and price. If you have plenty of time, you can get a big move. The longer the time frame, the bigger the move, as a rule, generally speaking. In your shorter term time frames, for example, a day trade by which you must be out at the end of the day, that limits how much money you can make. You're limited by the size of by the length of the day, but you're not limited by the size of your position. So what you're lacking in size of move, you have to compensate for in size of position. With a longer term trade, you can trade a small position with a bigger time frame and make more money or just as much. So it's time versus price. I'm going to talk to you today about long-term seasonals. I'm going to talk to you today about commitment of traders report plus timing. I'm going to talk to you today about divergence, the three most powerful tools for getting the big moves. Let me also say this. I don't think I will have enough time to cover everything today. The worst thing that I could do for you would be to leave you hanging and do what a lot of people do and say, well, these are my ideas. Unfortunately, you don't have all the information that you need. I'll be glad to sell it to you. I will offer you this. If you write, I'll give you the email address a little later. If you write, I will send you a video. I think it's about a 90-minute video called My 6 Best Timing Triggers that will clarify everything I'm teaching here today plus more, and it's yours, no obligation whatsoever. So I'm going to cover as much of this as I can today. So let's do this. We're going to talk about big data. Sorry, this slide is a little bit off. One moment, please. Big data. Big data is exactly what it says, big data. It's trillions and trillions of bits of data. Price data, volume, open interest, weather, economic trends, statistics, big data. In the past, the average human mind couldn't handle a lot of data. In fact, it dealt mostly with small data. When you're looking at a chart, a daily chart, a weekly chart, a monthly chart, and you're putting a trend line on it, you're dealing with small data. You can increase the size of that data by putting another trend line on it, a head and shoulders formation, a Fibonacci retracement, and then you get more and more data. But the question is, how do these things all interrelate? Does the trend line support or enhance the performance of the Fibonacci retracement? Does the flag and the pennant have validity? Do we know its results? Do flags really work? Do pennants really work? Do reversals really work? Key reversals? Until now, until recently, we couldn't test them. But you can put them on the computer and ask the question, do they work? How often have they worked over the last X number of years, or last X number of months? Some people say, well, the trend line can't be tested. You just have to use your judgment. If it can't be expressed as an algorithm, as a rule, you can't test it. If you can't test it, you can't trade it. Take my word for it. So, very important. You have to seek the truth by using big data. Once you find the truth, profits will follow. But you won't know the truth unless you look for it. And most people don't have the time or the inclination to find the truth. So how are you going to do that? Very brief answer. Go to the computer. Ask the question. The computer can handle it. You can say to the computer, put in the trend line as I define it with this algorithm. Put in economic data. Put in weather forecasts. Put in crop forecasts. Put in Elliott wave, put in unbalanced volume, ADX, stochastic, anything that can be expressed as an algorithm, as a rule, put it all into the computer and say to the computer, chew on this. Do you find any relationships that work consistently and profitably together? The mind can't do that, the computer can. And then you say to the computer, once you've found these relationships, test them out on data that you haven't seen before. Did they continue to work? And if they didn't work, figure out why and fix your problem and come back and tell me what you got. Most of the time, the computer will come out with garbage in, garbage out. But maybe that one needle in the haystack, those two needles in the haystack, will come out and say, you've got something, you can put your money on it. So the important thing is this: I will never risk my money or your money whatsoever on anything that is not statistically valid. So in less than 1 hour, I can teach you a whole bunch of stuff generally, or I can teach you something very specific and not keep you guessing. Then I can augment that by giving you that webinar that I promised. So choice number 2, I'm going to teach you something. So look, I'm going to go through this really quickly. It's very simple. You can read this later. The fact of the matter is, as I said before, the obituary of technical analysis, it's dead. It's moribund. You're not going to make money with it unless the rules are crystal clear. And I'm going to show you what I mean by crystal clear rules. And that's going to be very easy. So look, I get a bunch of emails every day. I get emails like this from a guy who said he's been trading for 11 years. He's not making money. He's got a problem. People are telling him it's his discipline. I'm saying this: it's not your discipline, it's your method. Your method is crappy. If you've got a crappy method, you're going to get crappy results. If you get crappy results, you're going to lack discipline. How can you have discipline with something that doesn't work? He wants to know if he should see a psychologist. He read the book by Mark Douglas called The Disciplined Trader. Did I think it could help him? Well, the fact of the matter is, Mark Douglas was one of my first students. I taught him how to trade many years ago. So the bottom line is this: do not read any of my books. You don't need them. What you need is specifics. You listen to the TV. You watch the business news. Here's a comment that I saw in the business news a few months ago. You don't need to read it. I'm not going to read it to you, but I've highlighted in red everything that the analyst said that was unclear. And so after saying all these things that are unclear, trying to explain what's happening in the market, the analyst goes on to say, of course, after all of these things that are uncertain and unclear, of course, geopolitical events could change this forecast dramatically at any time. So he's basically saying he's not sure. Take my word for it, but you know what? It could change. Talk about a hedge. And another one, you can read this later again. If you really listen to what people in the market are saying, when you think about it, look at the numbers in red, exactly, at the words in red. Exactly what does that mean when he says, like here, lofty price levels? What is a lofty price level? Is Tesla at a lofty price level? There was an analyst yesterday who said, yes, Tesla's at a lofty price level, then it goes up another $100 today. Don't listen to that stuff. It's going to screw you up and mess with your mind really bad. Look at the facts. So let's talk about that. Here's what you need to know about every trade. I'm going to give you a checklist. And if there's any one thing I can do for you today, if you come away from today's meeting with nothing else than this, and it changes your life, which it will if you listen. If you're not making money, you will make money. If you're making money and you want to make more, you'll make more. But you have to have all of these things. If you know this about every single trade you make, you will definitely make money. No guarantees, because you might be a screw up in other ways. But the bottom line is this: you want to know what stock or commodity or option or forex to trade. You want to know whether to buy or sell. You want to know the exact time to buy or sell short within 1 minute or less. And by the way, everything I'm showing you is knowable. In life, there are a lot of known unknowns, and there are a lot of unknown unknowns. These are the known knowns. You want to know your odds of success. You want to know your average profit, your average loss, going back many years, your stop loss or your risk, your first profit target, your profit to loss ratio. Are you making more money when you're making money than you're losing when you're losing money? The complete track record of the strategy. Average profit, average loss in points and percent. The largest profit or the largest loss. The maximum drawdown. In other words, maximum number of consecutive losses, the maximum option. Is it getting complicated? Look in the mirror, ask yourself the question, do you know these things? Do you know some of them? Do you know all of them? Most people, all due respect to everyone here today, don't even know 3 of these things. And I respectfully submit to you, after 52 years in the market, I know what the hell I'm talking about. What's next? And these, number of consecutive losses, number of consecutive profits, accuracy in percent, how to minimize your potential loss, how to maximize your potential profit, when to move your risk to 0, in other words, to lock in your profits, when to exit position. Also, everything about your strategy, 100% objective, etc., etc., etc. Read this later. I will show you today how to do that, at least several ways. But again, I say to you, I have no control over what you do with this good information. You can take good information and you can turn it bad. You can take nuclear energy and destroy the world with it, or power the world with it. Whatever you want to do. So let's talk about that. Let's go to the next slide. I teach and practice fact-backed, rules-based trading. There are a lot of crooks out there in the market. I want you to be really careful. A lot of people are selling a lot of useless information who will say to you, this is what it looks like. This is kind of like the bottom. This is a such and such. This is a such and such. I call this a such and such. Don't settle for that. Ask for the rules. If you practice fact-backed, rules-based trading, you will succeed. If not, you'll be flying blind. So let me talk about that. We're going to talk about this today. We already talked about that. So let's do this. I'm not an artist. I use a trading model. Let's go on. You'll get this later. Believe me, you will want to watch this video more than once. Okay, here's life-changing slide right here. In order to achieve everything on my list that I said before, and by the way, if you think I'm making this too complicated, believe me, I'm making it too simple. It is more complicated to sit and try and figure out what the hell it means that somebody said something, as opposed to knowing the rules. Make it easy on yourself. If you have to sit at your computer 2 to 3 hours a day during the day or after work and you're not getting results, and you've been doing that for a long time, that is Einstein's definition of insanity. Repeating the same thing that doesn't work. The bottom line is this. The structure of your trade is absolutely paramount to everything you're doing. Every trade must have a structure. The structure is always the same. It consists of 3 parts. Part number 1, setup. A setup is a pattern. There are hundreds and thousands of patterns in the market, as I said before. Retracement, support, resistance, divergence, reversals, key reversals, you name it. Cup and handle. These are all patterns. The question is, do they work? 99% of the patterns that I researched never worked. They make sense. They look good on paper or on a screen, but they don't work. So the first challenge is find patterns that work. How do we know they work? We go to the computer. You can be lazy. You can take someone's word for it, or you can say, show me the numbers. Or you can say, you know what, I got this figured out. I've got good judgment. I'm going to look at the market and I'll be able to look at the chart and make an interpretation. A dirty word, an interpretation of what the market's going to do. That's a lot of BS. You can't do it. Unless you're psychic. And if you're psychic, call me, I want to talk to you. But you're going to have to prove it. So you have to find valid setups. A seasonal pattern, I'm going to show you some today, is the setup. That setup needs to go to stage number 2, step number 2, which is a trigger. The trigger says, yes, this pattern that we're looking at is going to trigger this time. It's going to be a confirmation that this thing is likely to happen. It improves my odds of success. And I'm going to go to the next step, which is follow through. Follow through consists of several parts. Part number 1, you got to pull the trigger. In other words, you got to get into the trade. Most people screw up at the trigger. Actually, most people screw up at step number one. They have no setups. They've got gut feel, and that's all they've got. So how do they screw up at the setup, at the trigger? The follow through. They say, well, it looked good yesterday, but I think it's a little bit too high. I should have bought it a week ago. I say, listen, smartass, if you could have bought it a week ago, why the hell didn't you do it? What do you mean it looked good yesterday and it looks bad today? What does that mean? It means nothing. Who cares what you think? If the strategy says it's a good pattern and it triggers, you got to pull the trigger and get in. Well, I'm afraid of the loss. Well, you're afraid of the loss. Well, I'm only willing to risk $500 on a trade. Well, your strategy says you need to risk 1,500. Yeah, I know that, but I can only afford 500. The market doesn't give a damn how much you can risk. If you can't risk trade what should be on your methodology, that trade is not for you unless you can mitigate the trade with a smaller contract, a smaller number of shares, an option or an option strategy. So follow through consists of several parts. Number one, pulling the trigger. Number two, getting out of the trade when it's hit your stop. People say, you know, Jake, I think I'm a pretty good trader. Joe, what makes you a good trader? Well, I know when to take my losses. Well, that's a lot of BS too. Not only do you have to know when to take your losses, you have to know how to maximize your profits. You've got to know how to turn that small winning trade into a big kahuna, because 80 to 90% of your money is going to be made on 10 to 20% of your trades. If you're not getting the big trades, you're not getting nothing. Believe me. So follow through. Getting in, getting out of the loss if you have to. And number three, profit maximizing strategy. So let's talk about something. The so-called 50 and 200-day moving average, the golden cross. When the 50-day moving average closes above the 200-day moving average, they would have you believe that that's the golden cross. It's a very bullish sign. The market's going to go higher. The death cross. The death cross. The 50 goes below the 200, the market's going to go lower. Opinions all over the place. You'll see them talking about it all day in CNBC. Newscasters who were simply reporting the news 5 years ago have now become market experts. They're giving advice. They're telling you, hey, the 50 crossed above the 200. 80% of stocks are above the 200-day moving average. What does it mean? Let me show you what it means. Let's look at the facts. Here's the facts. Guess what? We used something incredible. We went to the computer. We used technology. We used numbers. We used big data. We asked the question, how often has this golden cross, death cross been right in S&P from 1988 to 2020? There's been 27 crosses. Of those 27 crosses, I'll show that to you right over here. Of those 27 crosses, 48% of them have been profitable. The average trade has been 492 days in length. Who can hold a trade for 492 days unless it's a losing trade? Most people can't. People love to keep their losing trades till they grow hair on them. They get out of their winners really fast. So 66 days in the losing trades, 492 days in the winning trades. Most people have gotten out by then, taken the profit. So the problem is this, the accuracy is pathetic. I can do just as well, if not better, at throwing darts. And this is what the trade looks like year by year. Spotty, some years no trades, some years big trades, give it back for 3 years in a row, not good. So you say, well, you need to look at more data. Let's look at the S&P all the way to the Dow. Let's all go all the way back to the 1950s. Okay, sure, Dow Jones to the 1950s, 91 instances, 41% accuracy, 6 consecutive losing trades, 3 consecutive winning trades. This gives me all the data that I need on that list that I gave you. What are the numbers? I can't trade something like this. This is a losing proposition to me. I'm not interested in this. Makes no sense to me. It's stupid. I don't want to do stupid things. I worked hard for my money. I started with nothing. I did really well. I'm not going to lose it back. So the bottom line is this. It doesn't work. So let's go to the next slide. Oh, and by the way, check this one out. 6 consecutive losses. Consider the average trader. Average trader opens an account. They saw the E-Trade commercial. They think it's a piece of cake. They open an account, they make a trade, they lose money. They say, well, I lost money, but I understand that it's not a 100% proposition. Of course, I can lose money trading once. They trade a second time, they lose money. They say, this doesn't feel so good, but you know what? I'm disciplined. I'm going to do it again. They lose money 3 times. After the third loss, everything's different. Wait a minute. 3 losses in a row? That's unacceptable. There's a brave individual who'll go to 4 and say, let's try the 4th time. But after the 4th or 5th time, very few people are going to be around by 6 consecutive losses. Either they run out of patience, run out of time, or run out of money. So the bottom line is very difficult to trade strategies like this, even though the bottom line is they make money, 10,000 Dow points. But look what happens first. So if it goes against you all this time, you're not going to be there. So track record right over there. Compare that to this. A very simple strategy. 3 days, 3 hourly bars, 3 months. The first day is right over here. Second day right over here. You will recognize the second day is what's called a reversal. I'm sorry, an outside day. You trade lower than the previous day's low. You trade higher than the previous day's high. So this is the first condition. Computers can understand that because it's algorithmic. It's a rule. Anybody, even a computer can understand it. So it's got to be clear. On the third day, if you close above the high of the first day, you buy. On the third day, if you close below the low of the first day, you sell. It's algorithmic. It's incredibly simple. You take your profit on the first profitable opening definition. It opens in your favor by any amount. Or you use a stop. Let's look at the results of this little strategy. And by the way, let's look at it on the screen first. This is what it looks like. Day number 1. Day number 2. You trade higher than high of day number 1, lower than low day number 1. You close on day number 3 below the low day number 1. You buy it, you sell it at the market. You get out first profitable opening, very small profit. Here's another one. These are all very clear. Examine this in detail when you go through the video. So you might say, yeah, but Jake, look, you missed this whole goddamn big move. I say, listen, buddy, this methodology was not designed to grab the big move. We have other things to do this. This was designed as a 3-day short-term pattern, and that's what it does for us. And here is the track record. So compare the difference. We're looking at 645 trades, average profit $267 after commission. You say, well, wait a minute, that's not very much money. I say, that's not very much time. You're only in the trades for about 2.5 days. So this is designed as a short-term trading strategy with 85% accuracy. Big difference. It tells us everything we need to know. When to get in, when to get out, everything on that list that I gave you. And here's the record. So the computer learned the methodology from here to here, and then went forward on data it hadn't seen from here. So it's just an example. I'm not encouraging you to trade this strategy, but I'm telling you, this is what we need as traders. We need numbers. That's why I'm a numbers guy. Here is the history month by month. So I know, for example, that going into the month of April, it's going to be a good month. Going into December, it's a good month. So February, it's going to be a good month by most standards, but not the best of all. And we know this because we have the numbers and we have the track record. So let's talk about something else. One of the best books ever written about the stock market is written by a man named Art Merrill, M-E-R-R-I-L, Art Merrill, called The Behavior of Prices on Wall Street. Merrill did something really cool. He went back to the 1890s and studied the stock market and concluded that on the day before major holidays in the US, the stock market tends to go up. So for example, if you go to Thanksgiving Day, which is always on a Thursday, on the day before Thursday, which is Wednesday, we close higher than we did on Tuesday. So the strategy would be buy on the close of trading on Tuesday, get out on the close of trading Wednesday. We can use the stop and so forth. And doing that, we achieve a 73% accuracy, a very simple little strategy. I like the strategy, but if I go to the computer and ask the question, is it possible that this pattern, pre-holiday pattern, which is statistically valid, which could happen no more than once in 10,000 times by chance, is it possible it begins earlier? We can find that out by going to the computer and asking the question. So we go to the computer and we say, computer, in S&P futures, is there a pattern that begins before the Wednesday before Thanksgiving, Tuesday before Thanksgiving, and goes on later? And the computer crunches a bunch of big data and comes out with this. It says, historically, buying March S&P futures, close of trading November 20th, getting out December the 4th, with a 3% risk, has been right 81% of the time, with a 17.4 to 1 profit to loss ratio, average profit, average loss, everything you need to know, including the complete history. Now we're talking about what I'm talking about. Now we're talking about numbers. We're talking about data. We're talking about fulfilling every condition on the list that I just showed you, every single condition. So how do we do this? It's very simple. We do it by computer. In addition to that, we have every single instance that this occurred, and we have the track record. We can say whatever we want to say about it, but we don't interpret it. The average person looking at this would say, you know what? And this is the results as of 2018. People would say, well, it's been working too good, it's due for correction. How do I know that? Well, they say, look at all these years it's been profitable except for this year right over here, but this year it's got to lose. Or they'll say, what a fantastic trade I'm going to get the farm. Question is, what really happened? This is what really happened. Before the trade went down, right over here, it achieved its profit target. What is the profit target? It is right over here. The average profit per trade, 19.83 S&P futures points. So again, you might say, the average person would do this. They look at the chart and they say, well, you know, I should have got in over here. The answer is, why didn't you? Or they'll look at the chart and say, well, it looked good until yesterday. Now it looks better. I'm going to wait for correction. Or they're going to say, well, you let this move go. And just like I said before, we have a way of getting that move. So go back to the computer and say, is there anything else I can do in January and February that's been right 80% of the time or more with 15 days or less in the trade? I'm looking for a short-term trade. Computer comes back and says, this one, December 22nd through January 7th. And by the way, I showed these at a number of webinars and published them in my newsletter way before the fact. So what happened? Here's that second trade. And again, you might say, yeah, but look at everything you missed. I'm not interested in what I'm missing. I'm interested in what I'm getting. It's like taxes. It's not what you make, it's what you keep. But as I said before, we have the ability significantly to capture those bigger moves as well. This is a small move. What do I mean by bigger move? As I said before, this is a big move. We know how to do that. So let's go forward for a moment. Remember what we're doing, right? Fact back rule best rules back trade. Okay, let's forget about that. We did all this stuff. We can avoid all this stuff. Let's go on to the next slide. This also happens in stocks. And let me impress upon you something very important. Here's a trade we had in Disney. 75% wins. And notice the average profit 5.71. Look what happens. This line over here shows the entry date, right over here. This shows achieving the profit 2 days later. My point being this, once you have the trade, however you get it, whatever way you get it, you must act immediately because otherwise you'll be lost. So let's talk about this. Here's another one, same situation. And here's my trades that I picked for February before the month started. February 2nd through February the 12th. And this trade went on the 2nd and is already profitable today. So let me show you something. Let's find a big move seasonal. So I'm going to take a moment here and do this. I'm going to go to a website, so just bear with me for a moment. I want to show you something very important. So just hang in there. I'm going to go to a website called seasonaltrader.com, like so. So just hang in there for a second. Computer, please cooperate with me. Don't fail me now, honey. Just bear with me, ladies and gentlemen. Seasonaltrader.com, like so, stocks. I'm going to log into this website as soon as it comes up, if it'll do me a favor and come up. So just hang in there. Let's try it again. Sorry about that. There we go. I'm going to sign into seasonaltrader.com. I'm going to ask the computer to find me a trade that's longer term. Let me show you what I mean. We're logged in. I'm going to go to seasonal trades, stocks. And just for convenience, I'm going to pick the first one. I'm going to ask it to find me trades that are longer term. I'll show you what I mean. So let's find the trade for February. Forget about January, it's over. Let's go to February, March, and April. I'm going to say find me, excuse me for a moment, please, ladies and gentlemen. February, March, and April. I'm looking for trades that are longer than 50 days, like so. So I'm going to be in this trade for 50 days or more. And I want a realistic stop, so I'm going to risk a certain percentage, like so. Show me trades that have this that are accurate. Let's see what the computer finds, like so. Computer found this trade right over here. 80% accuracy, buying, close of trading, whoa, February the 5th. Exiting April the 16th with a stop loss of 12%. So if you're willing to risk 12% closing stop based on the close of trading the 5th, this trade is good until April 16th, or the first profit target, 5.85%. And we can look at the entire history. Here's the history right over here. Let me bring it up for you. Just one moment, please. My mouse is not going. Here's the history. One moment, please. We're looking at 50 years of history. That's 50 years. Track record, like so. So you might say, well, there's been some losing years. Of course there's been losing years. We don't offer you perfection here. But we do have ways of mitigating that risk. Buy the stock, buy a put. Do an option strategy, whatever you got to do, you can do it. So that's how we find these trades, through the use of big data. And guess what? Because the accuracy is only 80%, we don't even need a trigger, because you can't really improve on something that's been right 80% of the time. So let's go back to the presentation. So seasonality is one way to find big trades. Let's go back to the presentation, like so.
Hey Jake, I'll let you know you're a few minutes over already.
Already? Oh no. Okay, let me finish up. Sorry about that, Dave. Hang on one second. Let me go to back to the PowerPoint. So here's what I'm going to do. I have a lot left to show you, so I'm going to offer you this. Let me go to the very end of the presentation. Dave, I'm very sorry about that. Hang on one second, please. If you do this, you can go to the end of the presentation. I have a bunch of stuff to teach you. If you go to, hold on a moment, please. I'm almost done, Dave. Just bear with me. Dave, can you put my website in the location there? If you write Chris@jakestradingstrategies.com. Chris is my trading partner and programmer. We will register you for a free webinar that we're going to do next week. And we'll send you the timing triggers video, no charge whatsoever.